So my name is Ryan Falvey. I'm Managing Director at CFSI, and I oversee the Financial Solutions Lab. CFSI started 15 years ago answering a question of how do we make financial services work best for those that need them the most. And so the last 15 years, we built a network of financial institutions from across the country who are focused on improving the financial health of Americans. A few years ago, we asked the question, how can we make technology make financial services, there you go. How can we leverage technology to make financial services work for those who need them the most? So we partnered with JPMorgan Chase to launch the Financial Solutions Lab. What we do is every year we raise a question to the industry. We raise a problem that's facing American consumers and ask for solutions. So this year we looked for companies that are improving the financial health of Americans. 57% of Americans, 138 million people, struggle to manage their finances, and they spend a fortune doing it, $141 billion in fees. And so what we do is we take the best, the brightest, the most ambitious teams, we provide them with capital, connections, and access to expertise to help them grow their business and become those future leaders of financial services. We've done 3 classes now. I think our results are starting to speak for themselves. The 16 companies that have come through the lab, they're now serving 1.4 million Americans, a 10x improvement from when they joined. Our firms have raised an aggregate $140 million of follow-on capital since joining the program. What we care about most is the impact these companies are having on the lives of Americans. Digit has saved $500 million for consumers. Lend Street settled millions of dollars of debt while also increasing the credit score of their customers. EarnUp has 98% of their consumers saving 4.5 years off their loan payments by accelerating interest and principal payments. And Wise Banyan's helping people to start saving that emergency fund that you hear so much about people missing. We expect nothing less of this current class of 8 companies, some of the most exciting, fastest growing, most ambitious companies in the country. And I'm excited to introduce you to 2 of them today, starting with Dave Hanley, the CEO and founder of Tomorrow. Dave?
Thanks, Ryan. So at Tomorrow, we've really aimed at tackling some really big problems. There's a few challenges that are coming that come when tragedy strikes. So half of all millennials would have immediate trouble paying their bills if anything happened to a wage earner in the household. 75% of Americans do not own life insurance. 78% of Americans don't have a will. So if you're under 40, it's north of 85% don't have a will. And 95% of Americans don't have a trust. What we've done is we've put these all together into one application that's free that you can download today and use for your phone. It provides a will, trust, and life insurance and a very visual experience that I'll show you in just a second. Now, a will establishes guardians for your kids. And again, remember, 4 out of 5 parents of young children don't have a will in place. So this establishes the guardians for your kids. Trusts actually deliver funds over time to that family. And then life insurance provides the needed funds that typically you don't have enough funds to look after people over time until you're at the end of your earning. And so this is what the app looks like. And it's going to run through and give you a demo of how this works. So when you come into Tomorrow, you actually invite your significant other to join you, and together you add your children. So I add my wife, Marin. Together we add our 4 children. And then we start answering some questions, such as, well, what is a guardian? And we have videos that explain what a guardian does. And then I start typing in a name. I might type in R-Y, and I get Ryan here. It uses the contacts on my phone to actually populate the names. I choose Ryan. It tees up a text message to Ryan saying, hey, Ryan, I'm setting up a will for my kids, and part of that is choosing guardians for Max and Mia. If it came down to it, would you be willing to do this for me? You can learn more here. It brings Ryan to an experience where you can learn what a guardian does and decide whether or not he wants to do that. You snap pictures of your belongings so you can actually add them to your will. You sync all of your assets so that you can know what your net worth is and start adding things to your trust. And then we actually take all that data. As you can see, there's a life insurance button down there, and you can buy completely optional life insurance. We are licensed nationally with 9 different carriers, AIG, Prudential, Protective, and 6 others. It takes 3 minutes to do the life insurance application because we're leveraging all the data that we already have through your free will and trust. So you're basically asking health and lifestyle questions to do that. We just launched 6 weeks ago with sort of a soft launch to get people in. We have our first 5,000 users in, engaging very heavily and using the app, producing more than 1,000 documents, as well as more than 1% of people who who even just install the app actually buy life insurance. There's a huge problem on the life insurance side. Everyone's investing on the buy side of insurance, cheaper, faster, easier to buy the insurance. No one is addressing the sales side of insurance. We're trying to, and we need more to do this, so as you find companies that do, it needs to be solved. 59%, or sorry, I should say, the average age of a life insurance agent is 59. And you sell plus or minus 5 years from your age. So as you go out and find companies like tomorrow that are in this space that can actually help more than 75% of Americans have life insurance and take care of their family, do that. Also, let me know, because we're looking for more partners. Thanks, everyone. And then Dave.
This one. All right. Hi, Jason Wilk, CEO, Dave.com. Dave is an app that helps users avoid the $20 billion in overdraft fees that Americans are paying every year. At Dave, we found out that the reason that people overdraft is because of two fundamental problems. The first is that they are unaware of upcoming spending habits. And so on the front end of Dave, we are an instant forecast using machine learning. So we are telling you about all of your upcoming spending habits, such as your Uber bill, your Amazon bill, your pending transactions, anything that can potentially put you at risk of an overdraft. As opposed to focusing on your current balance, we focus everything on your day predicted 7-day low. So this is, instead of a complicated graph for a user with complicated flow charts, we just focus on the lowest your balance will get in the next 7 days. If that is going to put you at risk of an overdraft, we let you borrow up to $75 against your predicted income to cure the overdraft before it happens. The reason why we pick that number is because the average amount that triggers an overdraft fee is just a purchase as little as $20, which contributes to an average of hundreds of dollars in fees for our user base. Aside from the fact that people are unaware of their upcoming spending and they have a cash flow problem for overdrafting, we also are focusing on the third pillar with our next product, which is a Dave Overdraft Emergency Fund. And so we are taking a small portion of each of your paychecks and setting that aside so you can help essentially borrow from yourself and help yourself avoid an emergency overdraft. 63% of Americans do not have $500 set aside for an emergency or a one-time expense. So we really think that focusing on this is going to be another way to improve the financial health of our customers and get them saving. Our advanced product is really interesting. Again, focusing on this $75 amount because of the $20 average purchase that triggers an overdraft. We want users to be able to not only get back to zero, but have a slight cushion as the average time that a user is overdrafting their account is roughly just 1 to 2 days before their paycheck hits. So this seemed like the most logical next step. We don't charge any interest. We have a gratuity-based model where if we help avoid a $34 fee, you tip us anywhere from $0 to $5 or $10. And that product has really resonated a lot with our user base. We also donate a tree or a meal for Americans for every percentage of tip that you give us. So it's a real social-based model as well. And that's Dave. We launched about 4 months ago. We have tens of thousands of users using the app, and we've saved over $1 million in overdraft fees for our users so far. Oh.